Well, what's going on, guys? Jeff here with Let It Grow Investing, and I wanted to tell you guys a little bit about First Form. First Form is a supplement company that I've been using for a long time, and they'll definitely help you get on your path to your fitness freedom and your the goals that you have for building a better you. So that whether that's building muscle, cutting weight, whether it's hair, skin, nails, anything else that you're trying to really improve on yourself, get yourself in shape for longevity, for peace of mind, for cognitive support. They've got a product for pretty much all of it. And it's some of the best products that I've used. I've tried everything over the years, and I keep coming back to First Form because it works. So if you want to help me out, help support the podcast, you can go over to firstform.com. That's 1stphorm.com/let it grow and check out some product and see what can help get you on your way to those fitness goals that you've got set for yourself as well. So again, be sure to use my link, Let It Grow, at firstform.com. Well, what's going on, guys? Welcome back. Welcome back to Let It Grow Investing. I am Jeff. Thank you very, very much for being here. And before we get started, if you could please make sure to like, subscribe, and share, I would definitely appreciate it and help boosting us up. So other people that are interested get some of the information that we're sharing here on the show. So a lot of different things that have been going on out there. We've seen the market kind of still melting up, some hiccups along the way. Earnings season has started. We've seen some financials report. We've seen some tech companies start to report, and that is going to be, gearing up as we go forward. I'm having a hard time hearing myself here, so I'm going to try to adjust my sound, but hopefully you guys can hear me pretty well. We've got a lot going on there, right? We had ASML, the lithography semiconductor. Basically, they make the machines that make semiconductors. That company came out and reported the wrong day of all things. First off, they reported a day early, and then they also said that the market was looking weaker than they expected. So that caused some things to go down. So that was concern one for, I believe that was Wednesday. I think that's when the market started trending off. I think that stock could be an interesting play. I want to try to get this one pulled up here, and not one that I've really paid attention to all that much, which truthfully we should, because that is where all things AI, all things semiconductors are happening. So if NVIDIA is making chips or ordering chips, they're using ASML. Apple does the same thing. I believe a lot of other companies are using their product. So that is going to be concern number one here, right? We've got ASML. I'm looking at the 1 month. If we take a look at this chart, you will see this big drop from the 14th back to the 16th, which would have been Wednesday. Yeah. So, we went down to 683. You can see now we are sitting at 723. It did rally up a good bit on Friday. We have some strong demand from some other companies. They are pointing to the fact that things still look pretty good on consumer, on demand, and how the economy is actually overall doing. Some people saying that we're not going to have a soft landing or hard landing. It's just going to be kind of smooth sailing. So we're taking all these things in stride. We're really watching what's going on out there. And a lot of people are still saying, hey, ASML, it might have been a hiccup for right now or for this quarter, but going forward, ASML looks like a strong company. So you've got this, what I think was a $500 billion market cap company with about 34% of upside right now. Yes, we probably had some of these price targets this week kind of come back down. Yeah, we had a 790, but we also had 1148. So Wells Fargo, I believe they had a pretty decent quarter. They had the CEO on with Jim Cramer. He was kind of pointing to a lot of the things that they are streamlining. They're getting rid of some of the businesses. They're getting rid of a lot of different employees. They are using AI in their business to really find their weaknesses, find their efficiencies, and really change that business. So Wells Fargo was trading pretty cheap, especially after this past quarter where things weren't as clear. Nothing really changed, but they did go ahead and move on up pretty nicely after earnings. Let's get to the chart here real quick. On the 1 month, you can see that we shot up from the low to mid 50s back in September, and now we're sitting up right around $65. So a nice move higher for them. Like I think it just said, not much on the way of upside, but some of these price targets are going to be a little bit skewed from the standpoint that things have just gone up. So we have some older price targets, and now, yes, Barclays did come out with a 75. That looks to be, yeah, that is the high on the street, about 16% higher from here. JP Morgan, let's just do a quick check on some of the financials and see where they're at. Small move upside for them. They have moved up nicely. Citi, oh yeah, about 16% upside for Citi. But some of the smaller regional banks are going to be some of the ones that people are looking at for more growth, more gains right now, as they are going to be a little bit better positioned for the cutting back in rates and other things that are going on the lending in the immediate area where these banks they serve. So a lot of different things there. It's definitely a good way to play some of the trend right now. Look at the XLF, the Spider ETF of the financials. That is one way to play it. You can look at the industrials as well, as rates are coming down and building is going to be kind of ramped up. We could see a rise up industrials as well. So yeah, a lot of different things there. Sorry, gotta hydrate a little bit here. So yeah, like I was saying, financials, industrials, that seems to be a solid way to play this market. I still think that tech is very, very strong. I don't think that is going away. But one of the things I was really looking to talk to you guys about today was the fact that some of the best stocks that have been in the market for quite some time aren't only tech stocks. And that is something that we kind of forget, right? We definitely think Magnificent 10, all the tech names. And this is actually going to be the best performing stocks in the last 10 years. And yeah, you'll see NVIDIA, right? You'll see the 26,000% of return over 10 years. You'll see AMD, but then we start to see some other names come in as well. Some that we're not familiar with, some that we are, but Celsius Holdings. I'm sure there's a lot of people out there that aren't familiar, but Celsius is an energy drink, and they are up 18,000%. They're outperforming AMD by 4 times at least, right? We've got Builder's First Choice, Builder Supply, right? That is a stock that has returned 3,500%. Broadcom, they're way up there. Monolithic Power. Every time I look at MPW, I always see MPWR, and I never really take a look at it. But that is definitely another one that is not quite in that tech space, but they are going to be one that is outperforming. And as we take a look through these other names here, this is in the 5 years. SMCI, yep, GameStop. We've seen that trend. We've seen Tesla, yes, more in that EV space, also a little bit tech. MicroStrat, which is going to be highly leveraged on Bitcoin, as most of their business is relevant, or a lot of their funds were rolled into Bitcoin, and they are really determining the value of the company based on what Bitcoin is valued at. Vertiv, I'm not even too sure what they do. Antero, I believe, is oil and gas, and again, Builder's First Choice. They made the list for 5 years. We got in the last 3, SMCI, Viking Therapeutics. That's one that I'm in. I'm still trying to ride that wave. We've got, and they are going to be more in that GLP-1 space as far as weight loss and diabetes and things like that, which has its place. I don't know that everyone should be using it as a weight loss kind of shortcut, I'll say, but it can be a very effective tool in getting that weight off. And hopefully people are making some other changes in their diet and in their lifestyle to help that trend continue, right? So yeah, as you can see, though, a lot of them that we're looking at, when you go down this list, even if I go back out to 25 years, Monster, 98,000% of return. NVIDIA, 302 over 25, or 302,000% over 25 years. Tractor Supply, Deckers, again, not tech companies. They are huge returns, but not tech companies. Apple's on the list. Old Dominion, that's freight. Texas Pacific, that's land. I'm guessing that's a REIT. Manhattan Associates, sounds like probably a REIT. I'm not too sure what they do. The point of the matter is, not everything has to be tech to be a major gainer for you, right? So that is kind of what I'm looking at today. We're going to try to change it up a bit. I will go over the results of week 43. And quick recap, we had AMD, Adobe, Pfizer, Visa, and Tesla. And we are going to be buying Pfizer. I did buy a little bit of Pfizer just to keep eyes on it. And we'll see how that one goes. I think it's a little bit undervalued from where it was coming out of COVID with the vaccines and everything else we were going to be concerned with. So that is definitely something that I think they have a bright path ahead when you look at their pipeline of drugs. And yeah, sitting at 29, about 11% of upside. Excuse me. And I believe the dividends, 5.5%. 5.75, right? 5.74. So we have a nice dividend there. I believe the dividend's pretty well covered. Earnings are looking a little weak. We got to get that under control, but hopefully management can get this thing turned around. Yeah, so we got those five. I believe I did buy some more Adobe this week. So we are looking at that. Man, my list of stocks that I want to talk to you guys about. First up, a small little company called Palantir, right? This is going to be a tech play, but a lot of different things I think we can take away from this. Well, first up, it's brought into the S&P. Second, we've got a company that has been doing great things, great returns in that AI space, and I still believe in this company long term, right? I was looking at my recent, or actually all of my buys for Palantir. I don't think I purchased this thing above $23. I think that is where my purchase prices have been. And that really wasn't all that long ago, right? So if I go back here, we were at 7, right? I was buying this at between 7 and 9. That was a lot of my averaging down. I originally got into this thing around 20. And, it sold off. It looked like a big loser. And I just kept accumulating. I kept accumulating because I believe in the company. I believe what they stand for. I believe in the path that they had. I believe in the conviction that they had in their own product. But I also really believed in their customers. And their customers aren't small entities, right? They're all government organizations, 3-letter organizations that really have a lot of power in the world. And once those institutions buy a product, it is really, really hard to get away from that. And they're not going to get away from it if it's working. Palantir on that AI front, the way that they collect data and the different things that they have as far as more and more products that these different organizations are using is huge, right? And every time you look at this one, they're buying or they have another contract with another Army, Navy, CIA, DIA, FBI, different organizations and different governments around the world. The runway for them from just government is huge, but then you also look at the corporations that they have and the other end uses that their products serve. So this is one that's got a wide moat as far as I'm concerned with, right? They don't have the competition like what Zoom Video is going to have. Zoom Video, I was looking at that one as well. They have a great product, but there is not much barrier to entry. All Facebook has to do, or Yahoo or Google, all they have to do is turn on this switch that says, hey, you can talk with all your contacts, and you don't have to be on the Zoom network, and Zoom business gets hurt. Well, Palantir has all these big companies' data, and to swap over is a massive undertaking. It is not something that can just be done flip of a switch. This is, a lot of planning, a lot of contracts, a lot of negotiations. And I don't think that these companies and these organizations are all going to get off of Palantir like you can get off of a Zoom, or you can go from one gas station to the next one, right? Not quite the same, but I believe that Palantir has that business locked up. This market cap at 96 billion. Yes, a lot of people are saying it's overvalued right now at 43. And when you look at the PE at a 246, yeah, I know it's expensive. We've talked about this. I am concerned with that, but I am not looking at this company as to what it is valued at right now, as much as where I think this thing can be valued at. Right? It says it's about 35% overvalued. Maybe in the short term it is. Maybe it is, right? But the problem here is not that it's overvalued in the short term, but I believe that this can be a $500 billion company in not all that long. I believe by 2030, we're going to be looking at a company that is 4 or 5x bigger than where we currently are sitting. Massive adoption of AI, more and more people using AI for collecting their data, for enterprising, for doing all the different things with less people in their staff. And that has been an ongoing thing that we've seen everywhere as more and more people are getting away from, and which one was I just talking about? It was a bank. Yeah, Wells Fargo. They were just saying that they're using more and more AI and less people, right? So we've got to look at the companies that are going to really benefit from the AI spend. And this is going to be one major player that I believe is undervalued long term, albeit possibly overvalued in the short term. So I do think that this can pull back. I do think that it can go back down to the mid 30s. But at the same time, I don't want you guys to just sleep on something that could be a massive gainer for the long term now, for the long term, and just not buy it because it never gets down to where we want it to be. It's kind of similar to buying or waiting for the housing market to come down, and it never does. And then you wish you would have bought a house 10 years ago rather than waiting for that dream house that you wanted to drop 10%. Is it going to happen? Maybe, but how long are you willing to wait? So Palantir is going to be stock one for this week, for week 44. I've got a sizable position. I plan to keep it. I do have some covered calls that I've told you guys about. They are, well, it's one covered call at $40, which means that I would sell 100 shares of my Palantir in December if it is above $40. So at that same point, while I'm actively have some that are possibly being sold, I'm still trying to build a position. I just really didn't think when I wrote it and it was a $20 stock that it would double in 6 months. Oh well, right? Oh well. I've made double on it, and if it's going to cash me out at 40 for 100% gain, so be it. I still have I forget how many shares, 500 and something shares of this. So position is fine. I'm not so concerned about that. I'd like to get some more shares. I do believe by 2030, this $96 billion market cap is going to be cheap, similar to Google buying YouTube for what, $8 billion, and now its ads do $200 billion or whatever exact numbers I have, or whatever the exact numbers are on YouTube. I don't have them in front of me, so don't quote me. But that's going to be stock one. I think that it is a millionaire stock in the making for the people that want to go and invest in this thing heavy, right? Number two, you saw it on that list, and I'm going to take a look at it here. We're going to take a look at Celsius Holdings. You would think from some of the gains that were on that list, I'm going to take a look back over here real quick. Celsius Holdings over the past 10 years was an 18,000% gainer. I still think it's got room to run. And this is tough, right? This is definitely a tough one as to where does this go? Where does the valuation lie? And I don't think that Celsius at a $7.9 billion valuation is capped out. When we look at Monster, let's take a look at Monster. Monster is going to be the big giant or monster in the room. Let's take a look. Let's compare the two. So we've got Celsius at 7.9. We've got Monster at 52.9. I think Celsius, it's kind of hard to talk health when you're looking at these two companies. I don't know that either is the best thing for you. They're going to be loaded with caffeine. Monster's going to have some with sugar, some without. I think Celsius is trying to get away from more of the sugar additives. So that's going to kind of be irrelevant. I think that neither of them are going to be health conscious drinks, although Celsius might be a little bit better for you. I'm going to say that this $52.9 billion valuation is probably where Celsius could grow into, right? I think that Celsius is still on the smaller end of things. Monster's pretty much priced right in there to perfection at the moment, according to the analysts. If we look at Celsius, CELH, and I've had this one on before, and it was not really well received, but CELH, we got about 40% of upside on Celsius. So when we look at these drinks, I don't think that the market is capped out. I think more and more people are looking to purchase. I think the market is actually expanding. I do believe that it could go international and really get some more following around it. But a lot of people seem to think that it's already priced like a Red Bull or a Monster, and it's not quite there yet. The market cap is not there. So I do believe that this thing could get to, a 20 or 30, $40 billion valuation. And then, this $8 billion valuation looks small. If it 3X's or 4X's, that's where we would be. I think it does have staying power at this point. A lot of the times when we're looking at a lot of these startups, we're concerned, well, is this going to be a fad, right? Is it going to be, I'm not going to try to beat up on Peloton, but I'll pick on Peloton a little bit, right? You look at Peloton and you look at every other exercise product that's ever been before Peloton. Is it going to be P90X? Is it going to be Tybo? Is it going to be Billy Blanks, whatever? Is it going to be the Nordic Track, the Thigh Master, whatever you look at? Is it going to be one of those? And Peloton came in at a perfect time when COVID was here, when everyone wanted to get back out to the gym, but no one really could. Peloton was in the perfect spot. And then it kind of, the stock really rallied. Everyone was behind it. There's still some diehards that are on there, but you almost look for that next product. Like, hey, where's the next trend? What is coming up next that is going to replace Peloton? Because that's always what happens in the exercise space. Drinks are kind of similar. Vitamin water came up, 50 Cent, sold it for billions or whatever. And it's still there, but is it going to have that staying power of a Gatorade or of some of the other drinks that are out there? So it's hard to say, but I think that the momentum with Celsius is there to say that they've passed that threshold of just being this week's drink. And now they might actually have that staying power and that momentum to get to that next level. Although a lot of these are going to be more speculative names than simply picking a Target or a Procter and Gamble or a Disney or a Walmart, right? Those are going to be those, high single digit, low double digit gainers year over year. Celsius is going to have the revenue and the bottom line growth to get to those valuations where I think it could be at that $25 billion market cap in time. So that would be one. Number two, that I think what we could look at right now to enter to get to a long-term growth story, to turn your investment into a bigger play. These are going to be a little bit riskier, but I think they have staying power and the momentum to get to where we want them to go. So that is number one. Number two, Palantir, Celsius. Number three, I'll go back to it. I'm not ashamed to look at SoFi, right? Oh, SoFi. Yep, they got some downside. I see it. I know it. I've heard it. And I got to agree with Citi. I think we can get back up to 12. No problem. I definitely think that the amount of growth that SoFi has had, we have gone from 1 million customers to 9 million customers. And the valuation had shot up and came back down, but we continue to add more products. We continue to add more customers. I believe it is the banking product for the newer generation, right? I believe that your JP Morgans, your Merrills, your Bank of America, that's kind of how the baby boomers or the Gen Xers, they did all their banking. But now I feel like the new generation doesn't need to have a branch to go into to get out cash. I feel like less and less people are more cash, and more people are looking to have convenience. And I think SoFi is going to be the spot that a lot of people look at for that online banking for the new generation. And man, after they got their banking charter, we had a lot of the problems with student loan repayment kind of solved. We got rates coming down. We got lending going up. They now can do a lot more different products that they weren't able to do in the past. There are a lot of reasons to look at SoFi to not stay at 10, not go back down to 4. I do believe that this thing has staying power. And the fact that we've 9x'd our customer base in the past 5 or however many years, I do believe that this thing is going to continue to grow. And, kind of exponentially. They've got a lot of different products in the money market, in the savings that are going to be competitive with other banking options, but they have the convenience of being that online offer. And I do believe that they're going to keep on growing that business out. So SoFi, I think it's the new age of banking. People don't really think that, like I said, a lot of these stocks that I'm mentioning don't have the staying power or don't have the momentum to really get to be the next NVIDIA, right? But we've seen before on that chart that Monster was one of these small little companies that then did, tens of thousands of % of growth. And I do believe that what was Monster? I'm going to try to look at it real quick. That's 5 years. Was it on the 25-year chart? Sorry, guys. Monster, yeah, 98,000%. Sorry, got it wrong. But yeah, it doesn't have to be a tech name that gets us there. I do believe that this banking option and revolutionizing banking or insurance or pharmaceutical from this old guard world of how it was into what it could be, I think is going to be huge going forward. And I think a lot of these big companies simply aren't pivoting quick enough to keep up with the trends of what could be going forward. So SoFi is going to be number 3. I know it's had a big run. I know Palantir has had a big run. Celsius has had a big run. I believe they've pulled back a good bit. Let's take a look. I didn't look at that one too close. I don't recall. Yeah, we pulled back. We had a nice pullback here on the 1 year. Yeah, back in March we're at 99, and now we're at 33. So I do think that it could be one that could be purchased, and the PE is not too crazy at a 31. I'm guessing forward is cheaper than that. Earnings is okay. I do believe that we're going to try to get that earnings up, and the bottom line revenues and margins are strong on a lot of these companies as well. So I'd like to see that. What else we got? We've got number 4. Number 4. Let's take a quick peek again, and I already called this one ASML. This is going to be the least speculative. The largest company on this list, and that is a $287 billion market cap. And there's a lot of reasons why I still believe this could be a great player long term. Oh, sorry, guys. I have a hard time talking for 30, 40 minutes straight. I feel like I need a guest on so I can take my my coffee break in a quiet setting while someone else is doing some talking. ASML. Still a company that I believe has the keys to make it going forward. Their EUV technology with the extreme ultraviolet lithography. It's 50,000 laser blasts per second into a piece of tin to make these semiconductor parts, essentially. I don't know that much about it. I did a little bit of reading to know what they do and the fact that they made these things. They make it possible for NVIDIA and for everyone else to really grow the size of their chips and the amount of capacity that they have in doing what they do. So ASML is a key component in this space. I do believe that this pullback is temporary. I can see that some people probably slowed down some spending. I don't think that's going to last. I do believe that long term, this is going to be a huge gainer. We've seen it before when I looked at SOXX, the iShares Semiconductor ETF. I don't know if ASML is on here or not. One would think that it would be, but let's take a look. Let's see what SOX has in their portfolio. AMD, Broadcom. It's not on the top 10, but it is probably in there somewhere. This is only 58% of the assets in these top 10 names. But when we look at the semiconductor ETF here, if we look at the performance, we will see that $10,000 10 years ago is now $89,000. So if we look at that as far as, well, one, why didn't we invest 10 grand back here and have $89,000 now? But if we, invested 100, we'd have what, $890,000. And it kind of seems silly that we weren't doing that. But ASML, I do believe, holds the keys to a lot of the AI innovation, and what they do makes it possible for others to do what they do in AI. So ASML on this sell-off, we have a lot of upside. I think we have a lot of positive equity to be had here. I think we're buying at a point where this does make sense. Even the low-end target is 790. Could we get to 1140? Probably. Is 970 possible? I definitely think that it is. Let's take a look at the chart real quick, though. I want to see what the RSI looks like. Technical. Is it technical? I always forget. RSI. There we go. Fairly valued. Right in the middle. Overbought, oversold. got into overbought territory back here in 21, peaked up here in 2024 at 1,000. But yeah, now we've come back down. So I do believe that we're at a fair entry point for this thing, and I do believe that this thing will continue to go up. So I think a fair entry point, I think it's going to be a rebound play, but also a long-term buy and hold type pattern. So if you wanted to build a position, I think this could be a great time to get into something like an ASML. For the gains short term, that are going to be a quick rebound with the AI market, I believe, and also long term, as we've seen with the SOX ETF, as to where this whole industry is going. So that is going to be number 4. Number 5, do we want to do it? Do we want to do it? I'm not too sure that I want to, but I'm going to throw it out there because we started the year selling honest. Do we get back into this thing? It's a tough call, guys. It is a tough call. Let's take a look here. We had bought this thing. Where did we buy this thing? Probably in 22 at some point on this terrible downfall from, man, the year of 2022 was rough for our investing challenge portfolio. We bought it somewhere up here. Our whole portfolio that year went down around 16%. I think it was 16%, but yeah, now we're up like 30%. So it's been a pretty nice rebound over the past 20 months, roughly. 23 and 24 at this point have been pretty solid. But the Honest Company has had a rough run. We got down into that dollar range. We were down here at $1.16. I think I sold it up here in right at the start of 24. Probably around 3.25 roughly. And this thing has been kind of trading sideways. Yeah, I guess it does not really sideways from 3 to 4. That's a pretty solid 30% gainer, but then it gave it back, right? So I do believe that this has a lot of staying power. It hasn't gone away. I do think as rates come back down and people have a little bit more cash, if their investments are going well, I do believe that people are very health conscious. What we put on our bodies, as far as baby products and things like that, I think people are very concerned about that. I mean, even just listening to some of the horror stories out there with microplastics and things like that, I'm more and more concerned about what the FDA approves and the things that, all the additives to our foods that people get away with. I think the U.S. has 10,000 things that have been added or approved for human consumption since the 50s, and other countries are only at like 300. It's kind of terrifying. So the fact that the Honest Company is trying to provide products that are healthy and kind of wholesome, I think that should have some staying power with the amount of problems that are on the rise from all different types of cancers and illnesses that are related to all these additives and microplastics and everything else that's in our food and on our, nutritional regimen or healthcare regimen. I think it's definitely a nice thing to see that the Honest Company is trying to go away from that. So Jessica Alba had started this company, right? I think it was Jessica Alba. And there's a lot of different things that they're into. I know it's a lot of healthcare, a lot of beauty. They are focused. They do have some cleaning products as well. So a lot of different things there for the Honest Company, ways that they can make more money. Personal care, focused on creating clean and sustainably designed products. Omni-channel brand where its products are available through its retail and digital. Diapers, wipes, skin and personal care, household and wellness. So like I said, yeah, a lot of those things that a lot of people are focused on having better and cleaner products for them. Get away from some of that stuff that is not maybe so great for us. And it could have a lot of staying power going forward. So it's a very small company. It's been around for a while, but it is a $379 million company. So it has a lot of room to run when you look at even a 5X play or a 10X play, giving it to $1 billion type valuation. You kind of compare that over to maybe it's not going to be a Procter & Gamble, but the fact that a Procter & Gamble is valued at $403 billion and Honest is at 300 and whatever million dollars. I think that we could easily get to, a $1 billion valuation, which would be almost a triple from here. And I think that the trend is our friend. The fact that it is consolidating, it is moving higher. People are getting away from selling off a lot of growth stocks. I do believe that more and more people are going to add to these positions that are in this realm of small cap stocks. So while it is a cheap stock, I don't know that it necessarily needs to be that forever. I do think that this market cap has a lot of room to go. They are trying to change a lot of things around from upper level management. They addressed a lot of these problems that were this big sell-off in the end of 23 or mid part of 23. And they have rallied up, 300% from where they were. And, we kind of got out at a decent time. But is it a good point? Is it a good idea to get back into the honest company and take that risk on this small $379 million company and put that, into play to get some of these massive gains? Now, obviously, the big fish in this week's battle is going to be ASML. I think we were looking at that for a lot of right reasons. I think that the upside could be huge. I wanted to look at analyst research on Honest before we get off of that one. So we're at 379. We got around 40% of upside. ASML was 33% of upside. Palantir had downside, but I think long term that's irrelevant. Celsius was what? We had Celsius had a $7.9 billion market cap, around 40% of upside. Sofi was also downside, I reckon. Right? That was a little bit of downside. Yeah, minus 15. I still think that is some old news, and I think some of these new price targets make more sense. 1250 seems very reasonable to me. 6, I don't think we're going back there. We could, but I don't think that long term that's going to be where it stays. There's some other companies that are on this list that I guess I'll take a quick second to talk about. Cake being one of them. These are going to just be some bonus stocks to take a look at for yourself. Cheesecake Factory, right? That is going to be this name right here. I think a lot of other companies in the space have really been struggling. You're looking at the Darden, you're looking at Red Lobster, the Olive Garden branches. A lot of those names have really been struggling over the past couple of years to really get any kind of footing. Cheesecake Factory has kind of quietly moved up here, right? We're sitting at $43. We got downside. However, I do think that this stock has had a nice pattern higher, right? Over the past year, we were down near 30. A nice, fairly smooth pattern up, right? And I think that could continue. Back in 2019, they had a huge purchase where they bought out. What was the name of that company? Let me take a look here. Let me see if we can't get that pulled up. Cheesecake Factory. They spent about $350 million on this acquisition. And let me see if I can't find that name. I know some of the companies, but I forget the actual conglomerate that they bought it from. Cheesecake Factory purchase 2019. Let's see if we can't find that. Yeah, Fox Restaurants Concepts. Let me share this tab instead. So on July 31st, 19, they had an agreement to buy Phoenix-based Fox Restaurant Concepts for $308 million in cash and another $45 million due over the next 4 years. This was a lot of different companies that they are buying that have a lot of growth, and they are looking to take a lot of these to nationwide chains. And I believe that concept is going to still grow for the Cheesecake Factory, for cake. And if we look at it, some of these are some smaller names that are doing huge numbers. Flower Child being one, Flyby, and what's North Italia, Blanco, which might not get as much growth as far as being in every market. The Henry, where was the North Italia? That's going to be a little bit more upscale. But yeah, a lot of different names that they are adding, and I don't know where the North Italia one is. Why am I not finding that? 50 restaurants, locations nationwide and counting. So yeah, this is a group that is going to be continually Adding to Flower Child, think casual dining, kind of farm fresh. That's what it says. Think Chipotle, a spin on Chipotle that's more fast casual. So yes, the more focused on health and that quick casual, affordable options, which I think is what a lot of people want at this given point in time. A lot more online ordering, a lot more in that space. So I do think that this kind of got overlooked when it comes to the Cheesecake Factory. They bought this in July. I think it got finalized in like September, and then you had COVID, right? COVID happened, and no one in a million years wanted to buy restaurant stocks. We didn't know what the future held for them. I know a lot of people went on a buying spree during COVID as far as what kind of stocks do we want to pick up on the cheap. But man, the restaurants were like a no-go. They were just a war zone because everyone thought that they were just going to fold up with everything being completely closed. So I think that this is kind of rolling out fairly slow for the Cheesecake Factory, but now we're getting a little bit more traction. The price earnings at a 17 seems reasonable. You got a decent dividend. The growth stories there that should all have been repaid now because that was a 4-year repayment on that other $45 million that they owed. And I think now it's just growth, right? We're looking to really outperform a lot of the other restaurants that have really been struggling, right? We've seen those, a lot of bankruptcies in that space for a lot of different things, a lot of COVID-related problems. And I still think that these companies stand to benefit in that space. All the small companies have really been chewed up and spit out at this point. A lot of them didn't survive COVID. And then you got this chain that looks strong, that they look like they are well positioned for this growth coming out of it. So that could be another way to play the market for long-term gains. Valued at 2.2. What's Darden at? Let's take a look at Darden. 2.2 valuation on Cheesecake. 19 billion valuation on Darden. So that's almost call it 10 times, right? If Cheesecake Factory and their companies can get up to what a Darden is, or even get halfway there, I think that Cheesecake Factory and their companies can certainly grow from where we are into a much, much higher valuation going forward. Cheesecake valuation is cheaper on a PE on the trailing 12 months. A little bit more of a dividend here on Darden, but I do believe they are the better growth story from one to the other. I certainly think that right now. So we've got that. Another one, Elf Beauty. I do believe that whole space has really sold off of some consumer demand, some like Ulta reporting that things are a little bit slower. We saw that in Estee Lauder when I was looking a while ago. And Elf Beauty looks like they are a little bit more growth oriented to that younger market compared to some of these other companies. And I do think that could be a great trend going forward for them. Shopify would be the number 3 runner up. And man, I still think Shopify is what was oversold. I haven't really checked on that price action too much lately on the chart. Yeah, we're back to where we were, but let's take a look at the price action here, or where we could be going. Pretty flat. But I do think that more and more people are looking to do their own thing, right? I was talking to a buddy yesterday who's an Amazon worker, and he had to go into the office once or twice a week, and it's probably an hour and a half, 2-hour commute for him. And he didn't mind the 2 days, but man, he does not want to do 5 days a week. So he's thinking he's going to start his own business, doing essentially what he does for Amazon, but privately. And, so he's talking a bunch of small business stuff with me. How am I structured? How do we go from A to B? How do you pay people? And a lot of different things of that realm. Right. But the interesting thing was he wanted to start his own thing, even with a solid job, wanted to, take that risk and do something that's better for him and his lifestyle. And I do believe that starting your own business is a huge undertaking, especially going from the security of that paycheck coming in every week. But I do think that a lot more people are looking to Shopify to either supplement their income or have that side business or go full time with their own thing. And not that his business was necessarily going to lean into Shopify, but I do believe a lot more people are looking into that type of thing in order to get their stuff off the ground. So my point here is I do believe that is a path forward for a lot of people to get out of what they do and do their own thing. And I think people are ready to take that, as they've been either laid off or pushed around, or, hey, you got to come in the office, or you don't, you can work from home, you get hired on that premise, and then it changes, or whatever the situation might be. So I do believe more and more people are going to be looking at a Shopify or looking at an Intuit or QuickBooks to be able to do their own business. So those are just some ideas that I've got. But this week, for week 43 on the Let It Grow Investing Challenge, we've got Palantir, Celsius, SoFi, ASML, and Honest. That's the 5 for this week. Let me know your guys' thoughts. I really would like to see how these are going to play out for you. Please join us with following along every week, and turn on the notifications. Please make sure you like, subscribe, and share. It does mean a lot. There are some different links to help get you going with crypto.com, with E-Trade, with Binance, and with Webull. That is where we are doing the Let It Grow Investing Challenge every week. And this is week 43 of year 3. So we have definitely been doing this for a while. So thank you guys for following along. Sorry, I got everything going off when I turn my phone on here. I'm just trying to see where we are sitting with the investing challenge. Yeah, we're up 21% on this portfolio. We're sitting at 33,692. So definitely some nice gains there. Thank you guys for voting, and I'm glad to see that this thing is winning. I'm going to try to do something real quick. So I'm just going to get to where I want to be here. So sorry for the placeholder of pulling up the other screen. But let's take a look here. My portfolio. I just wanted to show you guys something. I'm going to brag a second. Let's see if I can't get this pulled up. My individual tab, or my individual portfolio, is actually doing pretty well this year. We're this purple line at the top. So we are sitting almost double what the Dow is, above that NASDAQ line, above that S&P line at 22%, or 23%, I'll call it. We're sitting up, I'll call it 28%, because it's 27.8, and I'd rather have that 5% gain over the S&P. So just a little bit of pat my own back. Thank you guys for pushing me to do a lot of the research to get us doing a little bit better here. I'm trying to find other things that work for us, stocks that work well. Some of these gains are probably in Palantir. They're probably in SoFi. We've had some outperformers there. Some of them have been in, names that we all know that a lot of us probably own, like your NVIDIAs or your Apples, your Meta. But some of them are those off the beaten path stocks that have rallied, and now we are seeing these gains. So I am happy to show that we're at 28, I'll call it 28% gain for the year. And that's just year to date. Do I dare click that 3-year? I'm still got them beat too. Look at that. There we go. 33.6% for my portfolio, 30%, 31% for the S&P, 24 on the NASDAQ, 22.6 on the Dow. So that's nice to see. That's why I'm here, right? That's why we are trying to invest to beat simply buying VOO. And hey, for the past 3 years, we've been doing just that. So it's been rough. There's been some bumps in the road, but we are outperforming, and I'm tickled with that. So is it 10 times what the S&P is doing? No, but I'll take the win as just a little home gamer trying to do his own thing in his spare time. So that's all I got for you guys today. Thank you very much for stopping by. I will catch you guys in the next one, but please make sure you like, subscribe, and share. And let's get out there and make some money. Take care.